While the Fed is very intentional in their comments, and as Steve mentioned, there's definitely a purpose to making this statement during the market open. At the same time, they needed to do this. They needed to say something against such a significant drop in the equity markets. With 4,000 points lost in 1 week, more could follow if nothing's done. There was some speculation that there could be some type of action taken this weekend. And I think by releasing this statement, perhaps they're preempting that and buying themselves some time until the March meeting. I think, for the most part, everything we've heard from U.S. policymakers is that they still think it's a little premature, and they want to see more evidence of the U.S. economy feeling that pain before actually taking action. And I think what investors really want, as evidenced by the movement in stocks, is fiscal support, something from President Trump, something from Congress that actually would put money into their hands, like what some of the other countries around the world is doing, something with a little bit more immediate effect on their bottom line. They don't necessarily feel that an interest rate cut, which the market's already priced in up to 4 now, will be enough.
And if I may, I'm not even sure fiscal policy response at this point would help either. I think what would help is a coherent public health policy response, which we have not yet gotten from this administration. And I think there's some people who have criticized putting Mike Pence in charge, given how he handled the infectious disease outbreak.
But even if they came out, Ron, and said, so you have, on the one hand, this statement from the Fed. What if the news instead had been, hey, we're going to now have daily briefings to, by the
like
CDC
Mexico.
and right, what have you,
Yeah.
to kind of tell everybody here's exactly what's happening with the case count in this country. Would some measure like that, you think, do more to instill confidence than this statement from the Fed?
Well, yes, and in contrast to what we're getting, which is Mick Mulvaney this morning blaming the media for inflaming a situation that is actually real. The media did not infect 87,000 people, nor kill 2,000. It didn't put Japan and Hong Kong in a state of emergency and close their schools. It didn't disrupt supply chains around the world. It, did not track 8,400 people in California or quarantine 1,000 in Germany. These are facts that we have brought out, nor have we told people to sell stocks as a consequence. So when they keep saying, look, this is a plot to hurt the president, this is a very real event that's going to have consequences for some period of time, the duration of which we don't know. But it's not like we're making this up as a political ploy to harm a president. This is happening in real time around the world and having an economic impact.
And we certainly, I have to speak for CNBC here, we certainly did cover the travel restrictions that the administration promulgated about a month or so ago. And we covered it very, I think, thoroughly and responsibly at that point when they happened. And maybe we are not in as bad shape as we could have been because of those travel restrictions and the quarantining that we did. Kathy, are we at a point of such crisis that we really need to take fiscal action here and, as you say, put dollars in people's pockets?
Well, it would be the perfect excuse for the administration to do so. I think we're not necessarily at a point where that is necessary because the number of cases, regardless of whether you believe it's a true number of cases, in the U.S. is limited. And so far, U.S. data hasn't been terrible. Yes, earnings are going to be ugly this upcoming season. But I think that all the central banks, they really want to wait for the evidence. Now, with that said, though, President Trump, as part of his re-election campaign, has been pushing, for some sort of fiscal stimulus that would put money into the hands of Americans. And I think that the coronavirus situation, on the bottom line for businesses, I think bare minimum, this gives them an excuse to take some additional action. We've seen it abroad. Hong Kong has offered, cash 10,000 Hong Kong dollar payout to all of their permanent residents. In South Korea, they're offering rental subsidies for businesses along with temporary tax breaks on autos. So all around the world, we're starting to see fiscal stimulus. So while it may not be the permanent solve, and of course, a vaccine would be, much more meaningful, I think it certainly could stem the slide and the bleed. It needs to be an action that governments take eventually.
And the irony here, Ron, is that in order for the Fed to do as much as the market wants right now, or even more, like Steve was saying earlier, at this point, they'd have to do quite a lot. I mean, there's 3 rate cuts priced in. People are starting to talk about 4 actually now. 4 now, right? With the way things are dropping. You have to wonder if there's anything they could do that would really calm things down relative to some of either the fiscal things that Kathy's describing or, an announcement could hit the wires about better progress on a vaccine or a treatment and do a lot to calm people down as well.
Yeah, I mean, look, certainly the Fed could effectively put a floor under the slide in equities by cutting interest rates, because then you allow for price earnings ratios and other valuations to re-expand, assuming that we're not going to see negative growth in China, assuming that we're not going to see a drawdown in U.S. GDP, and as Goldman Sachs suggested earlier this week, zero profit growth among U.S. corporations. So if you lower interest rates, you make the stock market slightly more attractive in those terms. But again, it doesn't go to the root of the problem that we're dealing with here, which is how much economic activity has been disrupted and for how long will it last. Yes, the Fed can help out in a manner of speaking, but again, it's not the solution to this particular problem.